Bitcoin's future is all mapped out. This article by Marcus Ashworth for Bloomberg may be of interest to subscribers. Here is a section and, in fairness, there's a game attempt to stop this being completely off-the-scale Wild West stuff. It's a cash-settled futures contract in US dollars, with no actual delivery of Bitcoin required. The exchange will impose a minimum initial margin, the deposit required to trade a specified amount of futures contracts of 35%. That's 7 times more than for trading oil or MINISP equity futures. There will be a twice-daily requirement to make sure the 35% buffer is intact given Bitcoin's constant swings. Clearing members can impose a higher limit if they want. 1-minute trading breaks will kick in if the daily price moves 7% away from the previous day's settlement price, then again at 13% and a hard limit at 20% when all trading will cease unless trading can restart within that band. There are no stated plans to offer options on the futures, until the contract is established. That would be too much rocket fuel. Owen Tracy's view: anticipation about the wall of money that could hit the Bitcoin market with the introduction of futures is propelling speculation in the original cryptocurrency. This is an acceleration which is close to the ferocity of the move in 2013 when the price first managed to reach $1,000 despite the fact it is multiples that level today. China's banks need more capital after credit boom, IMF says, thanks to a subscriber for this article from Bloomberg News which may be of interest to subscribers. Here is a section. President Xi Jinping has highlighted financial stability as a top priority. People's Bank of China Governor Zhou Xiaochuan warned in October about the risk of a Minsky moment, or a sudden collapse of asset values. Financial watchdogs last month promised to overhaul regulation of asset management products, which hold about $15 trillion and are seen as a key threat to stability. Speaking to media on Thursday on a video call, the IMF's Deputy Director of Monetary and Capital Markets, Radhna Sahay, said China's financial system held 3 main risks. She pointed to an increase in credit that in other countries has been linked to financial distress. An increasingly complex and opaque financial system makes it hard to identify risks, and implicit guarantees encourage excessive risk-taking, she said. Credit growth needs to slow, guarantees should be gradually removed, and banks need more capital during that process, Sahay said. Banks need to have some buffers in order to protect against any possible distress that might happen, she said. Owen Tracy's view: financial stability is a priority for every country and just about everywhere has its own version of implicit guarantees. We can only imagine what would happen in the USA if the now explicit guarantee behind Fannie Mae and Freddie Mac were removed. What state would the financial sector be in now if the EU and UK had not stepped in to backstop it during what was dubbed a sovereign debt crisis but was in fact a cross-border banking sector calamity? Stock wobble, no help to gold as market bets on U.S. rate hike. This note by Eddie van der Walt for Bloomberg may be of interest to subscribers. Here it is. In falling stock prices and geopolitical risks haven't done much to support gold amid expectations of tighter U.S. monetary policy. Metal for immediate delivery fell to the lowest in 4 months at $1,252.44 an ounce in London, having dropped every day this week as traders factor in an increase in interest rates this month as a near certainty. Prices declined despite growing volatility in equity markets, with the S&P 500 index losing ground in 4 of the last 5 sessions. The rate hike is now looming and people are suddenly realizing that gold may not be the most attractive long position at the moment, said David Govett, head of precious metals trading at Marex Spectrum in London. Bullion is heading for the first back-to-back annual advance since 2012, but traders recently have dented those gains. Higher rates and a change in leadership at the Fed have outweighed deepening geopolitical risks, including the threat of war on the Korean Peninsula and a third intifada in Israel. People's memories are short and their pockets not so deep, Govett said. Owen Tracy's view: gold does best when inflation is rising faster than central banks are willing to raise interest rates. That is when its credentials as a store of value really shine. Alternatively, it also does well in a supply and elasticity meets rising demand environment such as we saw in the last major bull advance that peaked in 2011. Right now, we are somewhere in between, with expectations for future inflation outpacing the reality represented by official statistics, so gold remains largely range-bound, albeit with a downward bias as of today. EU says talks to go all night as Irish deal close. Here is the latest update on the UK's negotiations with the EU on the status of the Irish border. At the time of writing, talks will go through the night as the UK and European Union seek a deal on the status of the Irish border so that Brexit talks can finally move on to crucial trade negotiations. We are making progress but not yet there. Talks are continuing through the night, Chief EU spokesman Margaritis Schinas said in a Twitter post. EU Commission President Jean-Claude Juncker has spoken to Irish Prime Minister Leo Varadkar and UK Prime Minister Theresa May by phone. EU Council President Donald Tusk is due to speak to reporters at dawn in Brussels on Friday. The UK isn't confirming that a deal has been done, nor whether May will head to Brussels. If a breakthrough on the sensitive issue of the Irish border is reached and the Northern Irish kingmakers in the DUP accept it, then the three key divorce issues will have been settled, allowing talks to move on to the future relationship and the transition deal that businesses are desperate to get in place. The pound rose 0.5%. Owen Tracy's view: British business wants a deal. The City of London, which represents a significant proportion of the economy, wants a deal. Therefore, despite arguments about the independence of Parliament and wish to have trade deals which are more positive for the UK, a deal remains likely, as does a transition agreement which could be potentially lengthy. Owen's personal portfolio currency trade opened. Owen Tracy's view: details of this trade are posted in the subscribers area. Owen's personal portfolio update. Owen Tracy's view: one of the requests subscribers have asked for most over the last few years has been to have an easy way to find what positions I have open at any given time. Therefore, from now on I will update this post with any open positions I have on a daily basis. The information provided on this website www.ftmoney.com is for the purposes of information only. This website and its content is not and should not be considered or deemed to be an offer of or invitation to engage in any investment activity. Nothing FT Money does and nothing on this website is intended to operate or be construed as the giving of advice or the making of a recommendation by FT Money to any investor or prospective investor. FT Money and any other group or associated company, if it is not authorized or regulated by the Financial Conduct Authority in the UK or any other regulatory body in any other jurisdiction. By means of your login to our service, you are deemed to thereby accept our current terms of business, including this notice, except for permission to download a single copy for personal use. The research published by FT Money may not be reproduced, distributed or published in whole or in part by any recipient for any purpose, without the prior express consent of FT Money. Information featured on the website is based upon information and data provided by FT Money and remains the intellectual property of FT Money. Some of the information may also be provided by third parties, and whilst FT Money will seek to ensure that information featured the website is updated on a regular basis, FT Money does not accept any responsibility for, and disclaims any and all liability for, any such information, including the accuracy of such information or views or opinions expressed on the website. Any person considering an investment opportunity as a result of data presented on the website should give regard to all the content of the website, and should perform their own due diligence and obtain advice from suitable qualified professional advisors before investing. Prospective investors are also encouraged and recommended to take their own independent legal and taxation advice together with any other advice that they may consider necessary to consider the benefits and risks attached to any investment opportunity. No representation or warranty, expressed or implied, is or will be made or given by FT Money, including its executives, employees, agents, contractors and advisors, in relation to the accuracy or completeness of the contents of the website, save that any such liability is not excluded in respect of fraudulent misrepresentation. http www.traceymoney.com. Fuller Tracy Money is a global strategy service provided by David Fuller and Owen Tracy for internationally oriented investors. This comprehensive service includes comment of the day, concise analysis, market reports, informative articles, price charts, plus David and Owen's personal portfolio transactions. Subscribers audio, daily insights on global stock markets, government bonds, currencies, and commodities. Friday's audio focuses on the big picture, long-term outlook. Subscribers chart library, review any market on an absolute or relative basis, filter thousands of instruments and create your own customized templates and personalized lists. Index current percent UK 107,495.644.770.06 gold 1,243.702.000.16 OIL WTI 57.670.530.93 DJIA 24,544 10.00